Welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. Markets recover from early weakness to end flat after a fairly choppy session. The rupee weakens further on the back of dollar demand by oil importers and higher crude oil prices, ending at 81.80 to the dollar. Global crude oil prices rise after OPEC nations and allies, including Russia, agree to keep production targets unchanged. This even as the G7 and European Union $60 per barrel price cap on Russian crude comes into effect. Easing of COVID restrictions by China also helps. The monetary policy meeting starts today. CNBC-TV18 Citizens MPC votes for a 35 basis point hike ahead of the RBI's rate decision on the 7th of December, but adds that the Reserve Bank may have to tweak its stance to indicate huge uncertainty about the next policy steps. The G20 Sherpas track under India's presidency kicks off in Udaipur. US Deputy NSA Mike Piles tells CNBC-TV18 that America will continue to look for more ways to impose costs on Russia while recognizing the cost of war for developing world, adding that China has to play a constructive role in debt relief and must agree with what other G20 nations are ready to offer. German Chancellor Olaf Scholz warns that it would be a grave mistake to stop talks with Russian President Putin completely. Scholz, in an opinion piece for a Foreign Affairs magazine, wrote that while the West must stand up for democratic values and protect open societies, one must also avoid the temptation to once again divide the world into blocs. 3 suitors submit binding bids for the bankrupt Shrey Group. As the deadline ends, a consortium of Varde partners and arena investors, NRCL and Oxfam Investments submit plans. The Shrey Committee of Creditors will be meeting this week to discuss bids, verify compliance and negotiate offers. Constituencies across central and north Gujarat go to polls in the second and final phase. Prime Minister Modi, Home Minister Amit Shah and Chief Minister Bhupendra Patel cast their vote. Results will be announced on the 8th of December. China gives in after several days of widespread protests, announces the easing of many COVID-19 restrictions, but maintains that its zero-COVID strategy is still in place. 2 new COVID-related deaths are reported over the weekend. Iran's Attorney General hints that the country's morality police has been disbanded following months of protests sparked by the custodial death of Mahsa Amini, but there's no official declaration. Protests continue as many say disbanding the unit will not mean the strict laws governing women will change. Well, it's been a choppy session of trade today. We've seen the sensex and the nifty end the day flat. The broader markets outperformed the benchmark indices. IT stocks were a major drag. The nifty, while metals did well. Nigel is standing by to wrap up the day's market action for us. Nigel.
Well, it was a good day of trade, actually. You'll say the nifty ended more or less flattish, but the broader market participation is something that the street will like. The buy on dips on the nifty worked yet again. Intraday, we went down to around 18,600. But if you bought those dips, you got 30, 40 point dips intraday, well, you'll be happy because we did see quite a bit of bounce. And the broader market participation, that's encouraging because that's been lagging. Now, on the nifty itself, Reliance Industries was down 1.5%, but the banks and the financial names more than made up for what Reliance Industries didn't perform today. Now, in terms of the reopening trade, the China reopening trade, it had a rub-off effect on metal stocks. So both ferrous and non-ferrous names, they went running away in trade. But just one word of caution out there. If metal prices are going to move up, it won't be very, very good news because input costs start spiking up and that in turn will hurt earnings. For the time being, we're treating this at a bit of a bounce. The reopened trade has helped stocks like Tata Steel, Hindalco, as well as JSW Steel. But there was another pocket that did well. The NBFCs, Mahindra and Mahindra Financial Services, they came out with their monthly update, and the street liked that. Piramal Enterprises has seen a sharp downtick, but that bounced back in trade as well. Remember, in the last few weeks, well, it's been under some pressure, but today it did bounce up. And even Manappuram Finance, well, that stock did see a bit of a relief rally. And some of those outperformers like TVS Motors and BHAL, they came in for some mild profit taking. What's the outlook for the markets from here on? Well, the Nifty is likely to be in that band of around 18,550 to around 18,850. That's the high we hit, by the way, in the past week itself. The RBI commentary, that's going to be very, very crucial in the next couple of days, and that's what will give further direction both to the Nifty as well as the Nifty Bank. But the heartening aspect is that we are seeing broader market performance. And now you're feeling that, yes, we are at all-time highs. Otherwise, portfolios were hurt. But for the last few sessions, well, that's turned around a little bit. Continuation of this mid-cap, small-cap outperformance is something that the bulls will like.
Nigel, many thanks for joining us. Well, it is day 2 of the 4-day G20 Sherpa meetings currently underway in Udaipur. Green development, technological transformation and women-led development were among the key themes discussed at the meetings. Our colleague Parikshit Luthra has been tracking the action. He joins us now with the latest.
Well, we're joining you from Manik Chowk in Udaipur, and there is a cultural evening right behind me, and all the Sherpas have gathered here for this cultural evening. On the big priorities, on the big issues that were discussed, definitely, as one diplomat described it, there were constructive talks, but there was implicit tension in the room over the Ukraine-Russia war. If you had to describe the mood at the G20 Sherpas meeting in Udaipur, that would be it. India has proposed a green development pact here to all the G20 Sherpas, saying that we want one agreement which encompasses all the growth and developing needs of emerging economies and the world as well. So that should include climate finance, affordable technology transfer, and a clear roadmap as far as attaining containing our sustainable development goals are concerned. Countries have raised concerns over how we are falling back on UN SDG 2030 agenda. There is also a lot of concern about the economic impact of the Ukraine-Russia war. Many countries don't want to speak about the impact of sanctions because there is tensions over that in the room as well. Russia clearly made the point that the slowdown in the global economy and the disruption is not because of the war. It is because of the sanctions being imposed by the West. The West made it very clear, and especially the G7, that price caps are here to stay, and they are meant to stop the ability of Russia to fight the war, and it will help countries like India bargain better with Russia as well. G7 clearly making the point that they will continue using G20 as a forum to put pressure on Russia to hold them accountable for the war.
India has been buying oil from Russia. We are a very large country. We buy very little compared to what Europe buys, and that has been highly emphasized. We will continue to do what is in India's interest. That there is a debt from IMF, there is a private sector debt, and there is also debt from China. And it's important that everyone sits together, discusses, and then puts out a debt package for that country.
We will continue to find ways of imposing costs again, while recognizing that Russia's war of choice is imposing costs on the rest of the world, including the developing world. And the United States is going to stand with the rest of the world, including through the G20, to look to relieve those pressures that Russia is causing. China needs to play a constructive role in stepping forward and offering debt relief and debt restructuring on similar terms to what everybody else is willing to offer.
Well, all the action there from the G20 Sherpa meeting currently underway in Udaipur. The latest in the Shrey Group insolvency case, it is now down to 3 potential suitors. As far as Shrey is concerned, they have submitted binding bids to acquire the Shrey company's assets under the company law, under the IBC. Joining us now is Ritu for more details. Ritu, what do you have for us?
Well, it's down to the final 3 suitors who are in the race to acquire the twin Shrey Group companies under the insolvency and bankruptcy law. The first binding bid has come in from a consortium of Varde partners and Arena investors. The second binding offer has come in from the National Asset Reconstruction Company, or the NARCL, which was recently made eligible to bid for companies under the IBC by an amendment in the ARC rules by the RBI. And the third offer has come in from Atham Investment. While offers from NARCL and Atham are not known yet, we do understand that the consortium of Varde and Arena has made an offer of close to 14,000 crores to acquire the Shrey twin companies. Remember, there were as many as 7 suitors who had shown an interest, but only 3 have now come forward. So the likes of Prudent ARC, Edelweiss ARC, even ArcelorMittal did not actually come forward to make these offers when the deadline ended a couple of days ago. Remember, the total claims that the Shrey group of companies are facing are over 32,750 crore rupees. Canara Bank, Union Bank, State Bank of India, PNB and BOB are some of the key lenders that are involved in these discussions. We understand a Committee of Creditors meeting is expected to take place in just a couple of days from now, which will evaluate all of these offers and verify whether or not they meet all of the eligibility norms and then negotiate with the bidders.
Ritu, many thanks for joining us. News from the aviation space. India has jumped to the number 48 spot as per the audit conducted by the United Nations International Civil Aviation Organization. That's not all. SpiceJet has announced that its operations and safety processes have been found to be in order by the ICAO. Danish is standing by with more. Danish.
Well, the Indian aviation sector is reaching new skies as India has achieved the number 48 ranking as per the recently conducted audit by ICAO, which is a UN body. Well, this audit was conducted after a very long time, and over the past 2-3 years, we have seen drastic changes in various parameters, and hence we have seen a huge jump for India when it comes to these ICAO rankings. As per its normal protocol, the ICAO conducted its audit on SpiceJet, and SpiceJet was judged on various different parameters, which included flight operations, maintenance, and other operational parameters. And after conducting a thorough audit, the ICAO came out to this conclusion that even SpiceJet's airworthiness is good and the practices at SpiceJet are better. And later on, we saw that SpiceJet came out with a statement and it clearly said that the airline's airworthiness is good, and as per the audit conducted by ICAO, it is a very safe airline to fly in. So all in all, if we see, India's overall ranking has improved over the past few years, and if we compare India's position with other neighboring countries, especially China, India is much ahead of China in the ICAO's ranking. So all in all, if we see, this news is not good only for India, but this is also good for SpiceJet and for other airlines, as this gives more confidence to the flyers, as well as it gives more confidence to the investors of these airlines. And as per government sources, whenever the next rankings take place, whenever the next audit takes place, the Indian government is very much confident that the new rankings will be much better than the 2022 rankings.
Danish, many thanks for joining us. The winter session of Parliament is all set to begin, and with that we are going across to Abhimanyu to take us through the 16 bills that are slated to be introduced. Abhimanyu.
As many as 16 new bills are slated to be introduced in the upcoming winter session of Parliament. It remains to be seen how many of them are going to be passed and which ones will be sent to a particular parliamentary committee for further consideration. The names of the bills, as mentioned in the circular issued by the Parliament as of now, are the Energy Conservation Amendment Bill 2022, the Multi-State Cooperative Societies Amendment Bill 2022, which aims to strengthen governance and bring more transparency to such bodies. Also, amendments to the Forest Conservation Act are also being considered as part of the government's agenda in the upcoming winter session. A bill to form Northeast Water Management Authority is also expected, apart from 4 amendments to the Scheduled Tribe Order, as well as the Trademarks Amendment Bill and Repealing and Amending Bill 2022. Also, the Mediation Bill 2021 and the Anti-Maritime Piracy Bill 2019 are all expected to be taken up in the session of Parliament. It remains to be seen what more is going to be introduced as part of the government's agenda, and whether there are going to be any significant objections to the same, which may lead to sending of these bills to any particular parliamentary committee.
Abhimanyu, many thanks for joining us. We will head into a short break, but when we return, Oxfam India's latest report is out. They talk about a digital divide that is increasing. That and more when we return. You're watching Business 360. Women unemployed, rural poor are lagging due to the digital divide. That's the headline coming in from the Oxfam India report. To take us through the details of the report and, more importantly, what the recommendations are going forward, joining us now is Amitabh Behar of Oxfam India. Amitabh, always a pleasure. Thanks very much for joining us. And I just want to mention, for the benefit of our viewers, that this report is different from the economic inequality report that Oxfam puts out. That's going to come in at the start of 2023. But let's address what you are saying, Amitabh, by way of this report. Through the course of the pandemic, we realized how important access to digital technology was, whether it was education or healthcare. But what we are now also realizing, and your report highlights that there is a significant digital divide and it's widening.
Absolutely. As in, COVID was a massive disruption, and a lot of people thought that the digital space provided answers. But if you really look at the story, I think our report tells that story and fairly bravely that actually the digital divide further accentuated inequality. So, I think the story of this report is essentially about how inequality gets both accentuated by the digital divide, but on the other hand, also reflects the inequality in the society, whether it's to be of the caste, gender, region, economic inequality. So, there's some, let me just give you some very quick data points. Only 11% of people who do not have education have access to a phone, whereas 76% of people who are postgraduate or above. That's looking at the education inequality. Let's look at the gender inequality. Men have 61% men have access to phone, whereas it's only 31% for women. And one of the most startling data points that we saw is, and this is contrary to what we all thought, is that pre-pandemic, the access to computers or laptops in rural areas was 3%, whereas it came down post-pandemic. And in urban areas, it's 8%. So what we're essentially looking at is that, this conversation about technology and the digital space providing solutions needs to be, we need to be cautious in seeing this as a silver bullet, and we need to really look at the existing inequalities, try and address it and overcome that inequality.
Yes, I would imagine that the existing inequalities are also linked to the digital inequality and the digital divide that you speak of. But Amitabh, you talked about what we are seeing specifically as far as gender-based digital inequality is concerned. Now, I want to understand, the report also talks about the road ahead in terms of course correction, and it does suggest things that the government, both at the central level as well as state governments, can do. Besides providing access to common computers and so on and so forth, what do you believe governments can do at this point in time to be able to provide access, to be able to drive down costs in terms of access to equipment?
So, can I just quote Amina Mohammed, who is the Deputy Secretary General, and she says that digital divide is the new face of inequality. Let me also just talk of the UN e-participation index. We are 105th amongst 193 nations, and what it is essentially looking at is three dimensions: online services, telecom connectivity, and human capacity. So I think on all these three, the governments can actually do a significant bit. And I would suggest that there is this basic framework of looking at access, quality, and affordability. And on all that, the government could play a fairly proactive role, and then there's much to be done. But I would underscore this by saying that the measures that we've been talking of trying to address inequality through higher investments in education and health, ensuring that people get a fair wage, and you have a progressive tax structure, all that also needs to be done. So I would say it's really a comprehensive package. Continue with your direct attack on inequality by investment in public provisioning of basic services, by looking at the tax structure. On the other hand, in terms of digital divide, ensure basic access at affordable and high quality services to pretty much everyone. But that's really a long way off at the moment.
Well, the first aspect that you spoke of course, that is going to be a central part of the thrust of the recommendations that the Finance Minister gets ahead of Budget 2023 as well. So what's the hope? What's the expectation, Amitabh?
The hope is that we are persistently trying to remind. I think we cannot afford to look away from the growing inequality that we have seen. As in, just look at every successive year, we are talking about growing inequality in economic terms. We saw the inequality in terms of access to health during COVID. Now we have come back with this digital divide. I think it's really devastating to know that only 1% of rural households have access to either a laptop or a computer, only 8% in urban spaces. And while this is the low level of access, we are still designing so much of our basic services, and which is good. As in, the idea is good to have digital India, but it does not speak to the reality of this country. And therefore, I would say if we do not confront the question of inequality head on, it's very unlikely that we'll move towards an equal society. And in fact, as we have seen, and this digital divide is again a prime example of how existing inequalities can further accentuate and drive towards a more unequal society.
Well, Amitabh, it's always a pleasure. Appreciate you joining us today to take us through what the Oxfam report is stating when it comes to the digital gap, to the digital divide. Appreciate your time. We will take a break here on this edition of Business 360. Thanks very much for watching. Do stay tuned. The news will continue on CNBC-TV18.
Brought to you by